The big listing today, and we have to talk about it. It's Bajaj Housing Finance. Makes a stellar debut on the exchanges, has listed at a whopping 114% premium to its issue price. Vamakshi is joining us with how this housing finance major stacks up against the peers. Vamakshi.
Well, absolutely. Like you rightly pointed out, it's a stellar debut for Bajaj Housing Finance, and rightly so, given the company boasts of a very strong franchise, has a very strong brand recognition, and is AAA rated. When we look at the fundamentals of the company as compared to some of its peers, nothing to complain here, and that is because the company boasts of the best-in-class asset quality, with the gross NPA at 0.28% and the net NPA at 0.11%. The coverage ratio too is one of the best amongst peers, the lowest credit cost in the sector. And even despite this, the company scores over some of its peers like LIC Housing Finance, PNB Housing Finance and Canfin Homes over return ratios like net interest margin as well as return on asset. The company boasts of a NIM of 3.9% and return on asset at around 2.3%. But that said, a concern is around the NIMs. They have been declining in the last few quarters due to rising cost of funds, and this is despite the increase in the higher yielding portfolios share. The company also has a very strong regional concentration. In fact, top 3 states contribute to nearly 70% of its AUM. That said, let's also look at how the company's valuations stack up against some of its peers. At the current price, there is no doubt that the company trades as a significant premium as compared to some of its peers, which trade anywhere between 1.7 to 4.2 times. The stock listed at a premium of nearly 115% at 150 rupees per share. With that, the price to book stood at 6.84 times, and if we consider that the stock could possibly hit an upper circuit of around 165 per share, at the upper circuit the price to book will then stand at almost 7.5 times, which is again at a significant premium to some of its peers. So that said, overall it's a very fundamentally strong company, but the valuations are something that we will have to watch out for.
Okay, and I think the question now, because very few people would have got allotment in Bajaj Housing Finance given the subscription, so what should you do? Everything is great, it's a pedigree brand, but can you go out and buy at these current levels? But this morning, the peers are seeing some profit booking. So LIC Housing Finance is down 5%, 5.5%, PNB Housing Finance, Canfin Homes. So across the board, these stocks, after a little bit of a re-rating in the prior 2 weeks, there is some profit booking visible here. And even Bajaj Finance and Finserv, the other two from the Bajaj Group, are under pressure. But thank you, Vamakshi, for that. Let's also listen into what Sanjeev Bajaj, CMD of Bajaj Finserv, and Atul Jain, the MD of Bajaj Housing Finance, had to say. When we spoke to them on the listing, we quizzed them on whether this 30% growth that they've seen for the last couple of years, is it sustainable? What is the outlook on margins? Listen in.
Relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort.
We are a variable rate company. On our asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis, through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies.
And while Bajaj Finance had a stellar opening,